Zaman, partner at Wall Street Alliance Group. So, Dil, thank you so much for joining us this morning. You are making a contrarian call to overweight financials into year end. So, in your opinion, what makes that sector attractive right now?
Well, we've actually been making this call for some time now, since the beginning of this year. And the way that we look at the financial sector is that it's a report card of the economy. And if you look at the economy right now, the economy is relatively healthy. Consumer is doing well, especially on the high end of the consumer, because they are benefiting from lower taxes. They are benefiting from the wealth that is created in the stock market. Also, we are seeing relatively low unemployment. And then on the AI-related capital spending, that is tremendous right now. So all of that put together, the economy is doing well, and that, we believe, is going to be reflected in the financial sector as a whole. And we already started seeing this today with the earnings reports that came out this morning.
Okay, and so as you just did, you tie, of course, the financial call to those three pillars of the economy. But which pillar right now is perhaps giving you the most confidence, whether it be the consumer, the labor market, or AI capital spending?
Well, I think the consumer is basically 70% of our roughly GDP is consumption. And a lot of that consumption, a significant portion of that, 50% of that, is being driven by the consumer, by the high-end consumer, the top 10% consumer. So I think consumer is the main driver over here. Means better lending, better loan growth. We tend to like, within the financial sector, based on liking the consumer over here, we also like some of the credit card companies like Visa and American Express. That's a play on the consumer. So I think out of the three pillars, if you ask me to pick one, Jenny, I would pick the consumer.
Okay, and if, of course, that top-end consumer is still driving a large share of spending, I mean, how should investors think about owning names through, of course, that exposure like Visa and American Express?
Yeah, so we think that those are good ways of getting exposure to the consumer, because generally, if we are seeing that consumers are spending, I think Visa, American Express, these are good ways to get an overall exposure to the health of the consumer. But within if we continue to discuss about the financial sector, I think within that sector, if we talk about the AI-related capital spending, we are seeing a lot of a record level of investment banking activity that is happening, IPOs that are happening, market volatility is causing a lot of trading activities. So because of that, we also tend to like companies like JP Morgan, companies like Goldman Sachs that are benefiting from that trend also. And we have exposure to those type of names in our client portfolios as well.
Okay, and so speaking to that banking side, what would you need to see in, say, credit, loans, or capital markets activity to stay as constructive as you are?
I think generally we are seeing that right now the default rate is low. It is a healthy consumer right now overall. So I think that whatever we are seeing right now that is coming out in the earnings report is giving us affirmation that the signs in the economy, it is a healthy economy. Now, one thing that we also have to be mindful of, we got the inflation print this morning. We also have to be mindful of that inflation potentially is going to be a lingering problem. And whenever we are investing, we advise a lot of clients, high net worth clients, a lot of physicians we are advising. We are always telling them that you always have to be mindful of the risk. And so we are optimistic and we are cautiously optimistic. But if you ask me what is the big risk right now in the market, inflation is the number one risk that we are facing.
Okay, and you have said energy works as a really hedge against geopolitical risk and inflation. So then why stay overweight now rather than take profits after this recent move, of course, we've seen?
Sure. I mean, that's a sector that we've been overweight, and we do think that because of these geopolitical tensions, we saw that there was an ease in the geopolitical tension and oil prices came down, and suddenly we saw escalation and the prices started going up again. I think this is going to be a recurring theme. Geopolitical, the situation with Iran, the war, I think it's going to take some time to resolve. It's not an overnight solution. There's going to be plenty of volatility there, and that's going to keep the oil prices up. And for us as managing portfolios, as portfolio managers, how do we take that risk into consideration? In our view, the best way to do that is to have a good energy exposure in the portfolio. So for that reason, we are overweight energy. When we talk about getting energy exposure, we look at things like the Spider XLE ETF, which gives you the broad exposure to that space. We also tend to like companies like Chevron, companies like Exxon, which give our clients a healthy exposure to the energy space.
Okay, and on the AI front, of course, have to mention, you do break the trade into winners, enablers, and beneficiaries. But where do you think investors right now are perhaps the most underexposed?
I think a lot of investors are exposed to the winners, but what we are talking to our clients about is that you have to get exposure to the enablers and beneficiaries as well, so that you can get exposure to the full AI theme. In fact, a lot of the winners right now may actually be very pricey because they've run up quite a lot. But on the other hand, if you look at the AI enablers as an example, when we talk about AI enablers, we are talking about the brick and mortar companies that are actually building the infrastructure for artificial intelligence. So here we're talking about utilities, construction, industrials. There we think that those companies are relatively more reasonably valued. Also, in terms of the AI beneficiaries, we are giving our clients exposure to companies that have actually now said that we've implemented AI and now they're seeing bottom line results. They're seeing productivity gains in their businesses. So it's important to get exposure to those areas of AI as well.
Yeah, absolutely, and good place to leave it. Really great conversation today. Aadil Zaman, partner at Wall Street Alliance Group. Thank you so much.